Let's look at the speech, yesterday's speech, and also the stressing of the uncertainty. So what do you think, how many rate cuts are we going to get this year?
Well, we do not know. We have been quite clear in that respect, no? Well, I think that in the case of June was, the cut was very, very clear, and we pre-announced, our decision for June. But for the rest, and given the uncertainty that we are going through, it's quite clear that we do not have any sort of predetermined path in terms of monetary policy decisions.
Yeah, let's
data dependent, meeting by meeting.
Let's attach some topics to these uncertainties. So what is on top of your mind when you say all these uncertainties? So what weighs most?
Well, geopolitical risks are there, no? The situation in Middle East, the situation in Ukraine, the war in Ukraine, the electoral processes that we are having now. I think that they are giving rise to a lot of uncertainty. And simultaneously, well, the evolution, for instance, of the labor market, the evolution of wages, productivity, these kind of things are going to be very relevant. And the possibility of having, I would not call it a trade war, no, but a fragmentation of the global economy is something that, could have an impact, could impair the evolution of the global economy and indirectly affecting Europe as well.
All these topics, or at least some of these topics you're mentioning, could push inflation higher. Is that the reason why you rather err on the side of caution when it comes to the rate cutting perspective?
Well, we have to be very prudent. It's quite clear. We have confidence that inflation is going to converge to, our definition of price stability, that is inflation in 2%. But simultaneously, we believe that the next months are not going to be easy. It's going to be a bumpy road. We will have up and downs in the evolution of inflation until year end. So even though we believe that the direction of monetary policy is clear, in the short term we have to be extremely prudent and extremely cautious.
For Germany, at least, recent inflation data is suggesting a sharper drop of inflation, so that could give actually rise to a rate cut in September if that would continue as well in other jurisdictions. Would you agree?
Well, the recent data of inflation, for this month for Germany, Spain, France has been quite positive, no? But I think that base effects are playing a very important part in the evolution of the short-term inflation. And as well, you have, how the different governments are withdrawing the support measures that were implemented in the past. So we are going to have up and downs. I would say that inflation until year end is going to be hovering around the levels that we have now, for both headline and for inflation.
But at the same time, we have economic activity not being very strong in the euro area. So is not a boost also from cheaper financing costs needed to actually revive?
Well, but the first quarter of the year was not bad. It was a growth rate of 0.3. It was a positive surprise. And we do not believe that the second quarter is going to be very different from the first one. So, that growth rate will not be very different. So there is a recovery, a very light recovery. And even, if you look at our latest projections, we indicated that, we had updated a little bit upwards the growth rate. But, growth is going to be below potential, that's real. But we believe that in the second half of the year, because of the recovery of real wages and because of the recovery of net exports, growth will be stronger than the first half of the year.
One big headache must be France, and also what it could mean for the bond markets. We've seen the bond markets really being wobbly, to say the least, after the snap election were announced by President Macron. Are you discussing the potential deployment of the transmission protection mechanism or instrument which you have in place?
Well, what we have seen so far is that the evolution of markets has been quite orderly. We have not seen any sort of, let's say, disorder evolution of markets in that respect. Well, we have seen a little bit of a widening of spreads, but the situation has been under control in that respect. No? And simultaneously, I think that this is not about monetary policy. This is about fiscal policy. The reason why, markets could be upset, for any government, not only for France, is that fiscal policy that's not adjust to the new fiscal framework. So I think that the key factor here is going to be to fully respect the fiscal framework that was agreed at the beginning of this year.
Of course, it's premature to talk about the final outcome of the French election because we have to wait until next Sunday. But are you doing precautionary measures for?
No. We will fully respect, the outcome of any electoral process, and let's see. But I repeat again, so far the evolution of markets has been quite orderly. We have not seen any sort of very, turmoil or turbulence in markets. A little bit of widening of spreads, and even if you look at the markets yesterday and the day, and today, well, the situation is a little bit more calm than before.
Another, of course, risk could stem from an escalation of the geopolitical situation in the Middle East, as you were pointing out. So in case we get another potential spike in energy prices, what would be the next step for the ECB?
Well, let's see. That's part of the uncertainty that I mentioned before, no? And that's why, we have to be very prudent with respect to our monetary policy decisions. And now if you look at the evolution of energy prices, they are a little bit above $80 per barrel, and it's a little bit of an increase. But if you compare with energy prices, for instance, 2 years ago or 1 year ago, the situation is not as bad.
The situation is quite bad when it comes to commercial real estate. Even the Bank of International Settlement was warning against the potential fallouts on banks' balance sheets. Still yet to come, right? So how do you take that into account when talking about the outlook?
Well, commercial real estate, according to our view, is the main risk that now, for financial stability, for the financial stability landscape. There is an important decline in prices. The exposure of the European banks is not huge. It's around 5% of the portfolio, of the credit portfolio of the European banks. But simultaneously, I think that the main exposure is to the non-bank financial intermediaries. And I think that there, we can have, an impact. But we believe that there are additional drops, additional declines in terms of prices in the commercial real estate, and we are especially vigilant in that respect. We have to bear in mind that there are connections between the non-banks and the banks, and perhaps the exposure, the direct exposure is not big, but indirectly we have to look at the potential impact that the decline in the prices of commercial real estate might have in non-banks, and simultaneously the links and the interconnection that this have with the banks.
I found it quite telling that I think those governments who have more exposure are calling for more rate cuts, but also those governments who have more problems in getting their budget together are calling for more rate cuts. Do you feel that political pressure on the ECB is increasing, or?
Well, everybody can opine about everything, but we are independent. We are going to take our decisions only, taking into consideration the situation of inflation, and we have a very clear target, that is to bring inflation to our definition of price stability, that is 2%.
Let's look for the last question. Let's look at the event here in Sintra. So, what will be key in your view in the discussions, also with your Fed colleagues?
Well, I think that the question, here, the main topic is that, inflation is not what it was 1 year ago, 2 years ago. Inflation has declined quite a lot, And so I think that perhaps, the main topic is how, we have to address the situation in order to reach 2%. It's the question of the last mile.
Yes.
For some people, this is not going to be very difficult. Other people have doubts. I think that will be, the most important part of the debate that we are going to have here.